Hey everyone, happy welcome back to the channel. I hope you're having an amazing day no matter where you are in this beautiful world of ours. So let's dive into XRP. Right now, we're looking at the one-day chart, and XRP is sitting at $2.83. The chart is looking absolutely fantastic today, and I'm seeing everyone saying, this is it. This is the moment we've all been waiting for. But hold on, I think it's way too early to make that call. Here's what I'm seeing on the 7-day chart. We went sideways for a bit, had 2 dips, and then more sideways action. But now, we're starting to break out of that pattern, which is exciting. If we can push through and hold above $2.85, I think we're heading back toward that $3 mark. The breakout is definitely coming. It's just a matter of time. And hey, Bitcoin is back above $110,000. Everyone's thinking this could be Bitcoin's final push to the top. But again, let's not get ahead of ourselves. A lot can happen this week. The good news? We're almost done with September. And honestly, September wasn't exactly incredible. Remember when everyone thought September would trend green for XRP? It looked promising for a minute. Then we dropped back down. But now we're heading into October, and I genuinely think October is going to be the month we've been waiting for, especially with all those ETFs getting approved later this month. I'm seeing headlines like XRP price eyes $4, healthy chart turns analysts bullish. And you know what? This happens every single time. When XRP moves up, everyone's bullish again. When it's in the red, everyone hates it and wants to sell. The chart turns green, and suddenly, everyone's FOMOing back in. We see this pattern constantly in crypto. For 2 years, I was telling people to buy XRP when it was sitting at 50 cents. Back then, the narrative was, we're never going above $1. Well, here we are, almost at $3 again. And I'm still telling people, you're not too late. XRP is going much higher. But now the new narrative is, we'll never see $4. People think XRP is topping out in this run. We haven't even started yet, and everyone's acting like it's over.
Oh, and speaking of FOMO, Dave Portnoy just bought 1 million XRP on Kraken and is calling himself part of the XRP army now. Remember, he sold just a few months ago. Now he's back in. This is how it goes in this space. Even the biggest influencers flip-flop all the time. When the market's red, they tell you to sell and say XRP doesn't look good. Then, when the market turns green, they're buying again and telling you to buy too. I did see one article warning that XRP investors should not rely on October price history. But here's the thing. This October is different. We have so much happening for XRP. First of all, we've got all those ETFs about to get approved. But it goes way beyond that. We're also on the verge of ISO 20022 implementation in November. I think a lot of people are going to want to get positioned before that happens. And then there's the potential for regulatory clarity, possibly coming by Thanksgiving, Christmas, or sometime in between. That would be absolutely huge for utility-driven cryptocurrencies like XRP. Anyone thinking Q4 is going to be horrible? I think they're all going to be proven wrong. Now, I've been getting a lot of questions about SWIFT's pilot program with Ethereum L2 Linea. Look, let them build. Here's the thing. Strategically, all on-chain value flows will eventually touch liquidity layers like XRP that manage settlement and efficiency. It doesn't matter what Swift is doing with Ethereum, because Ripple has the best product out there. They've got XRP for on-demand liquidity running through RippleNet technology. And anyone who thinks Ethereum is the future, they're sadly mistaken. A neutral, interoperable asset that's free of jurisdictional bias. That's the only solution that meets our new global monetary system's liquidity needs.
Let me show you what David Schwartz says about this.
Key factor is interoperability. You're working across jurisdictions and across assets. You need a neutral asset in between different CBDCs, or your liquidity is going to be divided among the n-squared pairs of CBDCs. Similarly, if other assets, such as securities around the world, get tokenized, there's even more need for a neutral asset between multiple CBDCs and possibly a large number of new assets in new asset classes. A central bank is not going to issue a digital asset that behaves like BTC, XRP, or Ethereum. These are neutral assets that are free from a single jurisdictional control. So CBDCs are not going to usurp the role of universal settlement assets. You need a neutral asset going in between CBDCs serving as a settlement across jurisdictions, accepted by all because everyone can come to accept that they can't get the whole world to use an asset they control. And so an asset nobody can control is preferable to one controlled by their geopolitical competitors. Bitcoin is sometimes pitched as the interoperability solution, and in the early days, that almost seemed believable. But as we now have some 1,500 cryptocurrencies that don't interoperate, and almost nothing non-crypto interoperates with Bitcoin, we just recreated the new version of the same walled garden problem. Instead of building an internet based on compatibility, we built one network and required everyone to join that network, demanding too many sacrifices too quickly. Internet without Cisco.
What David Schwartz is explaining is this. Even with central bank digital currencies, you still need a neutral bridge in between. That's the trust layer I've always talked about with XRP. You're going to see this especially inside BRICS. Why? Because Russia doesn't trust China, and China doesn't trust India. So when they're sending money within the BRICS system, a neutral bridge asset just makes sense. They'll also need that conversion capability. The Chinese yuan goes in, converts through XRP, and comes out as the Russian ruble. Same thing with the US sending money to the EU, and so on. That's why XRP is the future. And Anthony Welfare confirms exactly this. He said the entire CBDC work was crucial for learning what central banks wanted and understanding how commercial banks play a key role. Hence why stablecoins are now the focus. He had this great quote from one of his presentations. Christine Lagarde doesn't want a call from you to reset your wallet password. Tongue-in-cheek, of course, but the point is central banks aren't set up for retail customers and small businesses. They look after the big strategic payment world. The learnings from 2021 to 2024 greatly impacted XRP ledger development, both from Ripple and the wider partner ecosystem. As Anthony said, you've twigged a very important time for preparing the XRP ledger for the current world we live in and the exponential growth of stablecoins we're seeing. Now we just need to focus on interoperability. CBDCs, stablecoins, tokenized deposits, they all need to work together to make it easy for people and businesses to use them. That's what WIP and developments in this space, together with adoption solutions, will show you who the winners are. And it's absolutely coming. Central bank digital currencies are all the talk right now because we're getting close to that time when CBDCs are going to start going live. You're seeing the rise of digital ID everywhere now too. People are even fighting back against it. But this is the future that was always pre-planned. This was put in motion years ago. This isn't something that just started yesterday.
And XRP was built for this moment. Central banks need to send money to other central banks. The IMF is going to be massive in the digital asset space. Same with the BIS. They want to make sure everything stays on track and the train keeps moving forward. What happened with the XRP ledger is that there was tons of advancement because Ripple was listening to the central banks and what they wanted in place ahead of CBDCs. I saw this headline. Expert says the more XRP holders accumulate, the stronger the breakout. Expect a 10x surge from here. Of course, if people are buying XRP, there's less in circulation, so naturally the price goes up. But look at what Flare wants to do. They want to lock away 5 billion XRP in 2026. Check this out.
I think, the total addressable market for XRP staking is the total value of XRP. I don't see a reason why why you wouldn't want to stake, all the XRP in existence. There's no reason not to get yield on it. That said, I think a reasonable expectation is what I said before, which is, I genuinely think we could get to 5 billion by the middle of 2026 with a good tailwind, of course. For instance, we are working with Zaman, which is one of the major wallets on the XRP ledger, to create a smart account that enables you to stake directly from XRP ledger into Firelight on Flare without you having to touch the bridge. You don't have to interact with the bridge. You can just stake directly through what we call a smart account through Zaman, and that's in progress. And Zaman has, as I understand it, roughly 4 billion XRP. Mm-hmm. So, that's about $12 billion, just that. And I think, there's no reason that we wouldn't be able to pick up a reasonable amount of the assets that are used in Zaman. The appetite is very, very high because, everyone out there wants to hold on to their XRP holders. You're talking about multiple billions sitting at exchanges. They do not want to lose that business. And so they want to work with people that help them retain those users of that exchange.
Think about that for a second. That's 5% of the entire XRP supply being staked and locked away on Flare in 2026. And we're still going to watch other companies create XRP treasuries along the way. More and more XRP is going to disappear from the circulating supply. And at the same time, demand is going to be rising, pushing the price higher and higher and higher. I don't know when XRP's top is going to come, but there are too many things leading us through alt season this time around. Everyone's like, well, the top's coming in January, then expect an 80 to 90% crash on XRP. How does that happen if XRP keeps disappearing from circulation while we have institutional money flowing into the ETFs at the same time? It's creating a perfect storm for a very high-priced XRP. And this comes from Eza, and I thought this was a brilliant post because it puts things in perspective about accredited investors. The message? You are not rich enough, so you cannot make the right financial decisions. The accredited investor rules are some of the most offensive rules ever written. It's insanity. You can do the craziest things in life, but when it comes to many of the world's most lucrative instruments or investments, the government says, no, kiddo, this is not for you. Leave that to the big boys. You can go gamble in a casino or go into crushing credit card debt. You can even die for your country. So how come when it comes to investing, some opportunities are reserved for the rich only? The rich can have access to them. It's almost dystopian. I discussed this in our meeting with the SEC because I think these rules are fundamentally flawed and unfit for today's day and age. I completely agree. I even remember when Gary Gensler was at the SEC, there were concerns he was going to put in an accredited investor rule for crypto, where if you don't have $10,000 to put into crypto, you'd have to go through a third party. And of course, they'd collect fees when you cash out. Good thing that never happened, and I don't want to see it happen going forward. But it goes down the same road. They don't want to let you get rich. They're absolutely not going to let you get rich easily. I still see people saying that in 2025, crypto and XRP is not for retail anymore. It's for the institutions. Look, everything that Ripple did with the XRP ledger is absolutely geared toward institutional investors. But here's the good thing. We beat the institutions to XRP for the first time in history, and we're going to capitalize on that. We're going to make so much money because of that. That's why I always urge you to stay invested and not sell too soon. Now, this comes from Blockchain Backer. I'm not participating in any passive income opportunities to earn yield on XRP. Yield is not built into the XRP protocol, so utilizing third parties and other blockchains to earn that yield and take on additional risk goes beyond my comfort zone. And I agree with that. It's very risky. All these companies keep popping up, these third-party companies that want you to get yield off your XRP. I want to see how it goes with Flare. Flare might end up being very solid over time. But beyond that, These companies you've never even heard of before, offering 10 to 25% yield on XRP, I would stay away from that completely because there's a good chance you'll lose your crypto. But like I said at the beginning of this video, today is a green day for XRP, so of course everybody's getting a little bit excited. But I think they're getting ahead of themselves. We're literally only up a little bit off that sideways action you see right here. We're only like a penny or two above it. So why would everybody think this is the moment we've been waiting for? When you see XRP break into a new all-time high and enter price discovery, that's when I'm going to tell you, this is what we've been waiting for. But until it happens, stay patient and stay positive. I want to thank you all for watching. I appreciate every single one of you. I'll see you in the next one. Have a great night.